Welcome to Trading Lounge and the S&P 500, and starting on the daily chart here, we have been working two counts, as you know, and this is the bearish count here for a wave 4 that's further down here, and within that we're going quite well within this because the market has dropped lower. And one of the important things here that I've been pointing out is that, well, we've got 2,500 here, which is a medium level for the trading levels, and then we've got 2,800 here. So the halfway mark is this 2,650 here. And I find from experience that this becomes a real balance line in the correction, and to be long and short above this particular price point is quite significant and quite accurate. So we're using it as a bit of a line in the sand to help us determine which count is correct. Yes, we know that European markets are pushing higher, some of the Asian markets are pushing higher, but this one here has been pushing lower. The Nasdaq has been reluctant to move lower, and the main stocks, you know, in the Nasdaq, in their reportings, Apple, as mentioned earlier in the week, reporting and so on. So they're sort of throwing figures to the upside. But yeah, so let's drill into this a little bit further. So one of the things here is that with the wave count from wave 2 down to wave 3 here, we're looking for 5 waves in this particular structure here. We know we've got wave 1 and 2 into play here, so we're in this next structure here. And also we're below this 2,650 as I've mentioned, but I want to go to the alternative count now, and then we'll come back to this one and look at it on an intraday basis. So the count for this one here is the alternative count is this little guy here, which is wave A, B, C, D. And I had this one as the E here because it pulled back to the 61.8%. And it's possible to count this in 3 waves here, but we can also count this in 5 waves here. But now it's really, you know, it's more complete and fuller here, and the relationship between each structure. So, you know, as a triangle diminishes here, then each pattern basically gets, you know, smaller. Normally about, well, it's not perfect, but between the 50 and the 60%, 61.8% sort of ratio. So this correction here would be 60% of this one, and this one would be 60% of this one, and so on. So it does count quite nicely here as a ABC for the D wave, and then an A and a B and a C for the E wave here. It's very difficult for this C wave here for me to actually get 5 waves down here though. So that's a bit of a problem for me on this one here. And we don't need to use this particular structure here unless we get a nice support on the 2650. And because it's tested lower from here, you know, it's really under that level. So we need to be on the bearish side rather than the bullish side. But support on this level here throws it to the upside, and then we can start looking to go long in stocks within this market. Yeah, so yeah, okay, that's sort of it in a nutshell, but let's just sort of drill in and have a little look at this here. So on the 4-hour chart, what we've been looking at, as you may know, is that we had wave 1 here, wave 2 over here, then wave 1 here, wave 2 here, and then we're looking for wave 3 to move down here. At this stage here, it appears that this move here, excuse me, is in 3 waves here. So we could look at this one as down for 1 and back for 2. The third wave here, we can't call this wave 3 because wave 4 here has gone back up and breached the price territory of wave 1 here. So it's a little bit awkward. So the count would be down for 1, back for 2, down for 1, back for 2, down for 3, 4 and 5 here, for this 5 wave structure here, and then this one here, 1 and 2 and 5 waves in here would be 4, and then down for 5 here to make the 3rd wave. So that's the way that it can possibly go at this stage, but only if it fails up into this space here on this retest here. Any move up here, just while we're here, on the long side, there's no need to rush, because we really want to be clear on this. So I know the money's in the turn, but that can be in a pullback or something, but here we're trying to work out the direction of the trend, so it's a different scenario. So if this moves up here, it's likely to move back and then move up and then do its little thing here, and then move up like that, in one way or another, or it can move up here, back up, then sit on here and then move up here, which either way we've got that high here, and then we've got these highs here to move into here. So yeah, we want it as support before we move long in this particular instance. So I don't know if the 2-hour chart, okay, the 2-hour chart here, we've got down for 1 and back for 2 here. It's also possible to have wave 1 sitting over here as well, with a little A wave, B wave and C wave into this space here as well. So not that it matters, it still leaves wave 2 here, whichever way you count it. And the move down through here, as I mentioned, is in 5 waves. So we've got 1 and 2, a nice strong 3rd wave and a 4th wave here, and then a 5th wave here. So we're looking for some sort of correction back here, and it could be quite complex. It could be, I mean, the move up here it counts better as a 5 wave structure. So really, an A wave, a B wave, and a C wave, and then down from this spot here. But like I said, we don't want it, there will be, you can see that there's been some price action here, lots of bars here, so we know there'll be lots of volume sitting in here, so it acts as a really good sort of resistant here. And if it does break through that, well then it makes it stronger. So on the on the hourly chart here, so we can count this down. I mean, I can count 5 waves in this little structure here for 1, and then an A and a B and a C wave up through to here, but it doesn't really matter. Like I said, we've still got a 61.8% retracement level, and then we can count this down here very clearly as 1 and 2 and 3 and 4 and 5. So at least that's clear. If that wave 1 is here, then we can have this as wave 4 here finishing, and then a move straight down from this point here. Otherwise, we need to look at this wave 2 here, moving down into, if I can just, well, I'll just move it down in here. So it would be down for 1 here, back for 2 here in blue, wave 3, wave 4, and wave 5, down for this 3rd wave here. Okay, so I mean that would be the logical point for this. Yeah, this little guy in here, that can be counted in different ways. So if I just go to the tick chart here, if I looked at this as wave 1 here, then wave 2 would have to be counted like this, with all of the A wave here, the B wave here, and a C wave moving up into this space here. But I have to say it counts much better as an impulse wave to the upside. So I can count this as 1 here, 2 here. I'll just go through this, a little bit boring, but it helps. So nice strong 3rd wave here, so we can put this 3rd wave in here, and 4th wave here, and 5th wave is actually here, because from wave 4 here, we've got a smaller 5 waves of 1 and 2 and wave 3. I know that this is overlapping a wave structure here, but it is a corrective move, and then we've got an impulse move here, so that's going to be wave 3 here, and that's going to be wave 4 here, if I can just remove those. And then this would be wave 5 up here. We wouldn't expect too much of wave 5. We certainly expect it to take this high out here, but because the extension's in wave 3 here, we would need to look at wave 1 and wave 5 being roughly the same. Another way to do that, though, is to take wave 3 here, just shooting the breeze here really, and taking 61.8%. So different ways of doing it, but so we could take this length here down to here, down get that length there. So that normally works quite well. Copy that and put that there. So that would take us up to that particular point. Another way to get targets to the upside is this way here, just grabbing that there, and that will give you 61.8% there. If you're day trading, then if you're intraday trading as a regular thing, then I've got the extension of 161 up here, but you should also put in 127 as well. And it's always nice to take some profit at the 127 mark in this space here as well when you flip into the upside. So really we can, I mean, this is the closest largest number, and we've got two targets, this one here and this one here, and then we also need to bring that into the price here. And yeah, this is the biggest number, so that becomes the dominant one here. We know 5 is the second strongest number in the market, so the 60 or 65 is there, so we have to bring it down to the 40, 45, and then 48 in here would play that out there. So yeah, let's just clean this up through here. If I just put this on 20 ticks, let's just go in and have a look at that there. We should be able to figure out where that space is. So little bit tough, so I'll just drop it down into, that was 20 ticks, this is 5 ticks here. 1, 2, 3, 4, and 1, 2, 3, 4, 5. So we've already started. We've got 5 waves to here, so we've already got to pull back, and we've got 1, 2, 3, 4, 5 here. So this looks impulsive here. Yeah, not much help actually, it's not that clear. Anyway, you can buy new highs above here anyway. But this looks like an A wave. This is corrective in here, so we should drop lower from this point. So if that's going to be the case, then this can pull back into, I should put it up there, but I've already got 5 waves here, unless I've made a mistake. I've got 1 and 2 in here. 1, 2, 3, 4, 5, and 4, and 5. Yeah, so I'm not quite sure about that actually. But it can pull back to the 30 area here at worst, so just keep an eye on that before moving higher. But that distance there already covers the first wave here, so you just need to be a little bit careful here. So the length of this wave here would be about right here, but it hasn't taken out the top there, so there should be more to it at this stage. All right, thanks for tuning in. Cheers.